What if I told you that silver breaking through $100 per ounce isn't the finish line, but rather the starting gun for the biggest precious metals rally in modern history? Right now, as I'm speaking to you, silver is trading at $100 per ounce. That's a staggering 233% increase year over year. Let me say that again, 233% in 1 year. But here's what most people are missing. While everyone is celebrating silver finally breaking that psychological $100 barrier, the real story is what happens next. Because according to multiple analysts, institutional forecasters, and market experts, $100 isn't the destination. It's just the beginning. In this video, I'm going to show you why silver could potentially 6x from current levels in 2026. We're going to break down the supply crisis that's been building for 5 consecutive years. We'll explore why governments around the world are scrambling to secure silver supplies. And I'll reveal why retail investors, the group that sent GameStop and meme coins to the moon, haven't even entered the silver market yet. By the end of this video, you'll understand exactly why the next 12 months could be the most explosive period for silver in generations. And why missing this opportunity could mean watching from the sidelines as one of the greatest wealth transfers in commodity history unfolds right before your eyes. So, let's dive in. Let me give you the current situation in plain terms. Silver has already had an incredible run. From January 2025 to January 2026, prices have surged from around $30 to $100. That's the kind of move that makes headlines and creates millionaires. But here's what's different this time. This isn't a bubble driven by speculation or hype. This is a fundamental supply and demand crisis that has been building for years and is only now coming to a head. On January 20th, 2026, silver briefly touched $95.78 per ounce, the highest price in recorded history. Major banks like Citigroup are forecasting $100 by March. That's less than 2 months away as I record this. BNP Paribas analyst Philippe Geisels has gone on record predicting silver will reach $100 per ounce by the end of 2026. But even more bullish, Alan Hibbard from Gold Silver is expecting silver to increase by over $100 per ounce this year, putting it above $175. And Bank of America? Their analyst Michael Widmer has stated that silver could rise to between $135 and $309 per ounce in 2026. Let me pause there for a second. $309 per ounce. From $100, that would represent more than a 3x move. And we're not talking about some random internet guru making predictions. This is Bank of America. But the story gets even more interesting when you understand what's happening beneath the surface. Because this isn't just about price charts and technical analysis. This is about a genuine supply crisis that governments and industries are only now beginning to understand. Here's a fact that should concern anyone who understands basic economics. Silver has been running a structural supply deficit for 5 consecutive years. That means for 5 straight years, demand has exceeded what miners can produce. Think about what that means. Every single year, the world has been consuming more silver than it produces. And those deficits don't just disappear. They compound. They add up. Where does all that silver come from when demand exceeds production? It comes from stockpiles, from inventories, from reserves that governments and countries have built up over decades. But here's the problem. Those stockpiles are now essentially gone. Countries that once sat on massive silver reserves, including the United States, now have essentially none. The cupboard is bare. Let me give you a concrete example. Shanghai exchange stocks have fallen to their lowest levels since 2015. London's vaults are seeing notable drawdowns month after month. Physical inventories are dwindling, and when physical metal becomes scarce, futures markets go into what's called backwardation. Buyers are willing to pay more to get silver right now rather than later. This is a massive red flag. It tells you people are desperate to secure supply immediately, and this brings us to what might be the single most important catalyst for silver in 2026, China's export ban. On January 1st, 2026, China implemented new licensing requirements for silver exports. In practical terms, this amounts to an export halt. Why would China do this? Because they understand that silver isn't just a precious metal, it's a critical industrial material, a strategic resource. And in an age defined by chips, solar panels, batteries, electric vehicles, and high-tech military systems, silver has become essential for national security. Think about this. Silver is the most electrically conductive, thermally conductive, and reflective metal on Earth. There is no substitute for many of its applications. China understands this. That's why they're hoarding supply. And they're not alone. For the first time ever, the United States has officially designated silver as a critical mineral. Russia has confirmed that its central bank is allocating funds to purchase precious metals, including silver. Countries are realizing you cannot afford to be dependent on others for critical materials. This is completely different from previous silver bull markets. In the past, it was investment demand, but this time, governments themselves are competing for supply. And when governments enter a market as buyers, prices don't just go up, they explode. Let me explain why industrial demand is so important for understanding where silver prices are headed. In previous decades, silver was primarily a monetary metal, but that has completely changed. Today, industrial applications account for more than 50% of total silver demand, and that percentage is growing every single year. Solar energy is one of the biggest drivers. Each solar panel contains about 20 grams of silver. Global solar installations are growing at double-digit rates year after year. Electric vehicles are another massive source. EVs use significantly more silver than traditional cars. As the world transitions away from internal combustion engines, silver demand is set to explode. And then there's electronics, 5G infrastructure, medical devices, high-efficiency batteries. Every major technological trend of the next decade is silver-intensive. Here's why this matters for prices. Industrial users can't just decide not to buy silver if prices go up. They need it. This creates what economists call inelastic demand. When investment demand drives a rally, prices can crash. But industrial users, they have to keep buying. This creates a floor under silver prices that didn't exist in previous bull markets. Now we get to what I believe is the most explosive part of this story. And it's something that almost nobody is talking about. Retail investors have still not invested in gold and silver. In 2021, we witnessed something unprecedented. Retail investors poured into markets like never before. They sent GameStop soaring and drove meme coins to astronomical valuations. But here's the thing, that retail wave never hit precious metals. The sustained retail mania that drove stocks and crypto to absurd levels, it never materialized in gold and silver. Think about this, tax returns are coming. For many Americans, tax refunds represent the largest single influx of cash they receive all year. This capital could flood into silver. But there's an even bigger factor, awareness. Now that silver has broken through $100 per ounce, it's generating mainstream media coverage. News outlets love round numbers. $100 is a headline that writes itself. And when average investors see silver making headlines, many will start asking, should I own some? Right now, precious metals ownership among retail investors is at historic lows. Fewer than 5% of Americans own any gold or silver beyond jewelry. What happens when even a fraction of retail investors decide to allocate just 5% of their portfolio to silver? The available supply would be absorbed in weeks. Unlike stocks where companies can issue more shares, silver is a physical commodity. When physical supply runs out, prices don't just rise, they gap higher. Let me walk you through what major institutions are saying about silver prices in 2026, because this isn't just speculation or hopium, these are serious analysts with access to supply chains. Citigroup forecasted $100 by March 2026. Their reasoning? Heightened geopolitical risks and shortages, and look where we are today. Felipe Geisels at BNP Paribas predicted $100 by the end of the year. We've hit that target earlier than many expected, but some analysts see this as just a pit stop. Alan Hibbard from Gold Silver expects silver to perform even better. He wouldn't be surprised to see silver increase by over $100 per ounce this year, putting it above $175. And Bank of America, their analyst Michael Widmer has put out a range of $135 to $309 per ounce for 2026. Let's talk about that upper range. $309. From today's levels around $100, that's a 3x move. But some see even higher potential. Mike Maloney has discussed scenarios where silver could outperform gold by 6x. If gold reaches $5,000, historical patterns could push silver well above $300. Some scenarios put it at $400, $500, or even higher. Institutional analysts are putting out price targets that were considered absurd just 12 months ago. We can't talk about silver in 2026 without addressing the geopolitical backdrop, because the world is more unstable now than at any point since the Cold War. Trade tensions remain elevated, conflicts continue, and questions about the future of the dollar-based monetary system are being asked openly by central banks. In this environment, governments are rediscovering that you can't wage technological or conventional war without silver. Modern warfare is high-tech. Drones, missiles, radar, they all require silver. A country that doesn't have secure access to silver supplies is at a strategic disadvantage. This is why the U.S. designation of silver as a critical mineral is so significant. It signals that policymakers understand silver is a strategic resource. Countries are diversifying away from dollar dependence and building reserves of tangible assets. This kind of government buying creates sustained demand that doesn't go away when market sentiment shifts, and it contributes to the structural supply deficit that's pushing prices higher. I want to take a moment to explain why this silver bull market is different from past cycles. If you understand the structural changes, you'll understand why prices could go much higher. First, the supply deficit. This is unprecedented. Silver has had deficits before, but never for 5 consecutive years, at a time when stockpiles were already depleted. Second, the concentration of supply. Much of the world's silver comes from a handful of countries like Mexico, Peru, and China. Any political instability or resource nationalism here has an outsized impact. Third, the rise of ETFs. Today, investors can buy silver with a few clicks. This makes it easier for capital to flow into the sector when prices start moving. And fourth, the macro environment. Central banks have printed unprecedented amounts of money. That capital is looking for a home. When it rotates into precious metals, the impact will be enormous. Now, let me walk through a realistic scenario for how silver could 6x from current levels. We're currently at $100. A 6x move would put silver at $600 per ounce. First, silver has broken through $100. That milestone is achieved. Mainstream media coverage increases, pushing prices to $120, then $150. Next, physical shortages become acute. Dealers can't get supply. Industrial users start forward buying to secure future inventory. This pushes prices to $200. If gold reaches $5,000 and silver follows with a traditional ratio improvement, that alone puts silver at $200. Then, retail FOMO kicks in. Tax returns fuel buying. Silver stocks and ETFs see massive inflows. Prices gap to $350, then $400. Finally, in a blow-off top scenario, prices overshoot fundamentals and reach $600 or even higher before correcting. It's not fantasy. It's based on historical patterns. So what does this mean for you? If this thesis is correct, we're in the early stages of a historic move. Silver at $100 is just the beginning. But there are risks. Silver is volatile. It can drop 10% in a day. However, the fundamentals have never been stronger. Supply deficit, industrial demand, government buying. The 2026 silver story is unfolding right now. It's already at $100. The breakout is happening. Don't watch from the sidelines. Stay informed, stay prepared, and keep your eyes on silver.